Heading over to X to find out what is breaking right now, but just in over $1.2 trillion was wiped out of the stock market yesterday. As you saw in the intro of the video, President Trump's SEC chair picks his top priority as establishing a firm regulatory foundation for digital assets. And in a big win for crypto, the FDIC now says banks can engage in crypto activities without prior approval. And a hot topic yesterday, obviously, was these cases that the SEC is getting rid of. The SEC has formally announced litigation dismissal against Kraken, Consensus, Cumberland says. And she says here, this is from Eleanor Tourette, no Ripple here, but I'm not entirely surprised because, again, it is slightly different than those cases in that, as Stuart Alderati mentioned in his post, the SEC now has to go to the Southern District and ask Judge Torres to lift the standard injunction. And once that's done, then they can vote on everything at once, including the withdrawing of the appeal. And in a wild and crazy piece of news, Elon Musk's XAI acquires X in an all-stock transaction, valuing both companies now as one single entity at $80 billion. Before we head over to the charts to find out the supports and resistance for XRP, this was a pretty telling piece that came out from Cointelegraph. XRP price may drop another 40% as Trump tariffs spook risk traders. Now, the other major thing that happened today was the fact that Bitcoin and Ethereum options did expire. We also did have Bitcoin drop down and fill the CME gap, which is always important in the futures contracts. On top of that, the XRP market is flashing warning signs as a bearish technical pattern emerges on the weekly chart. The XRP descending triangle pattern hints at a 40% drop. Since its late 2024 rally, the XRP price chart has been forming a potential triangle pattern on its weekly chart, characterized by a flat support level mixed with a downward sloping resistance line. As you can see here, we got the flat line across the bottom with the sloping angle from the top. A descending triangle pattern forming after a strong uptrend is seen as a bearish reversal indicator. As a rule, the setup resolves when the price breaks below the flat support and falls by as much as the triangle's maximum height. And as we take a look here, that support is going to be coming in right here. And the resistance of that level, the maximum height to the support line, gives a target of a price of $1.32 for XRP. Now, is that for sure going to happen? No. Can it happen? Yes. As of March 28th, XRP was testing the triangle support for a potential breakout move. And in this case, the price may fall to the downside target around $1.32. By April, down 40% from its current levels. XRP's descending triangle target echoes veteran trader Peter Brandt's prediction. He warned of a possible decline to as low as $1.07 due to the textbook head and shoulders pattern forming on the daily charts. So here you have your left shoulder, you got your peak here, which becomes the head, and then you've got your right shoulder. It would need to break the neckline here at $1.90, and then he says he has a target angled here at $1.07. Now, don't freak out because conversely, a rebound from the triangle support level could lead to a price towards its upper trend line around $2.55. A clear breakout above this resistance level risk invalidating the bearish structures altogether, instead sending the price towards $3.35. And if you've been following along with my charting, which we'll be doing at the end, we'll be using our weekly spider lines chart. 250 and now 255 that we talked about yesterday is exactly where we need to break and turn into a new support level to continue our uptrend. Trump's tariffs could amplify the XRP sell-off. The broader market, meanwhile, has turned increasingly cautious in response of Trump's 25% auto import tariff. This will go live on April 3rd, and these tariffs are likely to result in higher prices for U.S. manufacturers and consumers. The February 2025 U.S. CPI report already showed a 0.2% month-over-month increase. The St. Louis Federal Reserve President Alberto Muslim estimated that these tariffs might contribute approximately 1.2 percentage points to inflation, with 0.5 percentage points stemming from direct effects of 0.7 percentage points from indirect effects. According to the CME FedWatch tool, the probability of the Federal Reserve cutting rates to a target range of 400 to 4.25 in June has now fallen to 55.7%, down from 67%. So the likelihood of this drop in interest rates, which we definitely desperately need as a country right now for everything in the country, it's looking like the Federal Reserve is trying to stick it to Trump even further and hold these interest rates at 4.5 or 450 basis points. A delayed rate cut would reduce the flow of capital into speculative markets, stalling momentum for XRP and other digital assets that thrive in low rate, risk on environment. So what's interesting is fundamentally all the great stuff you keep on hearing about partnerships and amazing things Ripple is doing and growing its fan base, its customer base, XRP army, spreading the word of XRP. None of that matters until liquidity can come back into the markets. And what the number one factor to bring liquidity back is companies being able to borrow money cheaply for other parts of their business. We do need the interest rates to drop. And XRP is not the only one susceptible to dropping. Bitcoin price drops to 72% possible due to macro liquidity conditions. After a positive start to the week, Bitcoin price reverted to negative returns after Bitcoin dropped 3.5% in the intraday, the low of $84,000 on March 28th. The price rejection occurred at the cusp of the descending trend line, which is the black line right here, as we can see, in the upper range of the ascending channel. So as we take a zoom in right here, price was making its move up nicely. Unfortunately, this trend line came into play. It rejected off there once, twice, 3, 4, 5 times on the daily chart, and now breaking down below the channel, seeing a potential return back into the $76,000 range. Macro liquidity refers to the capital available in the financial system that can easily flow into risk-on assets like equities and crypto, but is influenced by factors like interest rates, Federal Reserve policies, and market conditions. According to Capital Flows, Bitcoin is exhibiting a greater convergence with traditional risk assets, but it remains at the periphery of the risk curve. This implies that for capital to flow back into Bitcoin, investors' mindset must shift from focusing on less risky assets, such as bonds, to riskier assets like Bitcoin and low-quality banks in the Russell Index, the researcher said. So broadly speaking, right now, the macro liquidity backdrop is neutral. Rates have come down marginally, but the carry trade continues to create risk for assets. But on the contrary, other analysts have pointed out the fact that the rise in the global money supply, the M2, could potentially trigger a Bitcoin rally. The global liquidity chart, which monitors M2 growth for major central banks, has historically formed a correlation with Bitcoin's price movement. So as you can see here in the chart, Bitcoin is the orange, the money supply is the yellow. It says global M2 money supply offset by 108 days. Bitcoin was making this nice rally to the upside. Now it shows that there's a potential pullback, getting back to that $76,000 range before the ultimate breakout to the upside, which is what the M2 money supply did. The key difference between the macro liquidity and the M2 money supply is that the M2 measures the total money supply. Macro liquidity highlights the ease at which capital can flow into risk assets. For context, even the M2 money supply rises, macro liquidity might remain the same if the money is allocated to low risk assets. As Capital Flows says here, the quantity of money in the system isn't expanding like it used to. But on a positive note, like we were talking about, Bitcoin fills the 85,000 CME gap. The CME Bitcoin futures gap indicates the difference between the closing price of Bitcoin futures on Friday and the opening price on Sunday evening. The gap gets filled most of the time, and traders approach these levels from point of resistance to point of support, depending on the market structure. So as we know, over that last weekend, price rallied pretty significantly from these levels in the mid 80s all the way up into the high 80s. Leaving this massive gap for that weekend, and now price has come back to fill the gap. BTC price did fill the gap before its daily close on March 28th, which can lead to a short-term bounce. The CME gap is also aligned with the retest of the lower range on the ongoing ascending channel pattern, as mentioned earlier. And this is that ascending channel that we were talking about earlier. And then obviously we had that trend line that came down this way as well, which it bounced off of multiple days. This is the 4-hour chart, so you're getting a lot more noise in the chart here. So now it comes to another weekend. Last weekend we got the pump. This weekend we'll see, are we going to continue to dump? And after all this craziness going on with the SEC versus crypto, now Elon Musk's Doge is going after the SEC. According to Reuters, on March 28th, Doge team contacted the SEC and was told it would be given access to the commission systems and data. The agency reportedly planned to establish a liaison team to work with the efficiency team, whose intentions were to not immediately clear. The SEC says our intent is to partner with Doge representatives and cooperate with their requests following normal processes for ethics requirements, IT security, or systems training, and establishing their need to know before granting access to restricted systems and data.